Good morning, everybody. February 15th here. I've been up early this morning trading and having a good time at it. I have got a really interesting chart I wanted to show you on silver. This is the iShares Silver Exchange Traded Fund. The ticker symbol is SLV, and we are looking at a probable breakout scenario. Now, let me go ahead and just identify the overhead ceiling here at $30 a share. And you can see where the price has come up to 30 and each time it sold off. So it came up to 30 and said, little pig, let me in. And it got smacked back down. And then it came back up again. Not by the hair of my chinny chin chin. And it comes back down again. And now it's going to huff and it's going to puff and it's going to see if it can break through 30. Now, if this is going to break above 30, it's a buy. And at 30, it's a pretty good price point for this. Long-term bullishness on silver is not even funny with what they're doing with the dollar and just general economic pressures on this. It's a very strong buy. The general idea here is to buy upon the breakout. The volume is relatively low. It's below average, which is typical leading into a breakout. As it breaks out, we should see volume spike if it's going to confirm. So if prices start to close above resistance, we should see the volume start to kick in and confirm as traders react. Now, this is a pretty good setup. You could buy the stock. You could buy options, long options in the money calls, at the money calls, long term. I would go out as far as you want. You could buy leaps on this. What I'm going to do today real quickly is I'm going to show you a synthetic, which is I am going to sell a put to buy a call. So I'm going to go open my little trading platform. This is a virtual trade, by the way. And again, guaranteed, not a guarantee, void where prohibited. This is not a suggestion to buy or sell silver. Take this as education only. I'm going to go ahead and take this July options contract, which gives me 150 days until expiration. And I am going to come down here and I'm going to sell these $30 puts, which is a promise to buy it at 30. And I'm going to get paid $2.40. So I'm going to go ahead and sell the put. And I could probably collect $2.41 out of that. I'm going to go ahead and hit confirm and send. And I just got paid $2.41 to sell a put. Now I'm going to take that $2.41 and I'm going to come over here and I'm going to buy the $30 call. $2.61. It's going to cost me a little bit of money out of pocket. I only brought in $2.41. This is going to cost me $2.61. I'll give him the mid price $2.60 between the bid-ask spread. I'm going to go ahead and confirm and send that in. And boom, there I go. Now, what I just created was I basically sold the promise to buy the stock at 30. Then I also have purchased the right to buy the stock at 30. And this creates a position that acts and behaves just like the stock. I actually have created for myself a delta near 100. Let me go to my trade tab real quick in my monitor page and just show you this particular trade. Let me go find it down in here. Here we are, SLV. My delta is 99.98. If I owned 100 shares of the stock, it would be at 100. Whoops, clicked on rim there. Let me go ahead and get that SLV. There it is. It's actually going to fluctuate around this 100. It's going to fluctuate just around 99.9 something something, as the two option deltas are both bullish. Selling the put is a bullish delta, buying the call is a bullish delta. The two to combine act just like a stock. And this is my risk graph. I have the same risk profile as the stock. Now, my near-term targets for this, I think this is going to probably rise to 34. And if it goes down, I probably need to shut it down if it goes below a certain price point. I don't want to risk too much money. But I think our upside potential for profits, in a couple weeks we could see it banging out towards 34, 35 realistically. And if it starts to head the wrong way, there's some tricks that you can use to stop the bleeding on that. But that's just a general idea. That's again called a synthetic option, where I sold the put to buy the call. And hopefully you found this informative and educational. And remember that all trades you take on your own are based off of your own decision, your own discretion. And this is for educational purposes only. Hope you enjoyed it. Thanks.